Hi, everybody. Welcome back to Ox Talks. Thanks for watching the show today. I appreciate the support for the channel. Please share the videos with people that you know and love. If you're not subscribed, I would appreciate you hitting that subscribe button. I want to talk about an important topic today. I'm going to share two articles with you, one from MarketWatch and one from Zero Hedge, that discusses the recently published consumer debt levels in this country. Okay, and for the last year or so, this channel's been in existence. I've been out here sharing this information and preaching to people to do everything they possibly can to not only get out of debt, especially toxic type of debt like credit card, but stop incurring a new debt, okay? Buying things that you can't afford. Now, many people use their credit cards and for things and they get benefits, miles, things of that nature, points. Okay, I understand that. And then they pay those credit cards off each and every month, so they don't get hit with these recurring monstrous interest rate, usurious basically interest rate charges by credit card companies, but they also are not digging themselves into a financial hole that they will not be able to get back out of. Many people, especially the ones that take on debt thinking no problem, we will be able to pay this off in a month or two, and guess what happens? They lose a job, or somebody in the family gets ill, they have an unforeseen medical expense, they don't have the reserves to pay off the credit card balance, and guess what? It starts accumulating interest. I will tell you that there is no free lunch. I truly believe that many people use these credit cards. We've done videos before on this. They call it doom spending or whatever it is. And I believe that they think that there will not be a day where they will be called upon to actually repay all of this debt, that there's going to be some magical resolution that comes in, that the Fed is going to continue dropping interest rates to zero-bound levels, and therefore they're going to not have to repay all that debt. Or let's say that they continue to use their cards irresponsibly, the ones that are using them irresponsibly, and then they're going to go hire one of these debt consolidation or debt relief companies to help bail them out. Let me explain something. There is no free lunch when it comes to this. And again, I'm not giving you legal advice or tax advice right now, but you can look it up for yourself. If you are one of those people that is recklessly spending and you believe, or let's say you're not, but you know people that are, please share this video with them. What's going to happen is as follows. The ones that think they're going to be able to go and enlist someone to negotiate down their debt. Let's say you have a $20,000 tab you owe to Visa, and you go to one of these debt relief specialists, and they're able to negotiate that debt down from $20,000, let's say, to $10,000, okay? And you think, wow, this is great. Look, I didn't have to repay $10,000. What you've just done is you've converted a $10,000 relief of the debt obligation to Visa into a $10,000 tax obligation to the IRS, because the taxing authorities consider debt relief and forgiveness of debt as income. Okay, again, look it up for yourself. Not legal advice, not tax advice, financial advice, but that is the reality. Okay, and then you've converted it to a $10,000 tax obligation that is no longer deemed unsecured. Okay, it will be a priority debt. You can't go wipe it out with the bankruptcy court or anything like that. So please understand that for all those that are making poor decisions right now in the face of much higher interest rates on credit cards, much higher penalties when you miss payments, and we all know that a lot of consumers in this country are in bad shape. A lot of consumers are losing their jobs. A lot of consumers are not able to find work. Now, I would hope that those are not the ones out there using the cards to the extent that I'm going to share with you in these next two articles, okay? First one out of MarketWatch. Total U.S. consumer credit surged in October, rising by $19.2 billion compared to a $3.2 billion gain the prior month. Think about that. $3.2 billion in September, October to $19.2 billion. And folks, we haven't even gotten to holiday spending yet. That doesn't include Christmas shopping and things of that nature. I can't believe that people spent $19.2 billion on Halloween, but you never know. So what are these numbers going to look like when we see these come out in the next 30 days, 60 days, once they reflect everybody's holiday shopping? It says, this was the fastest pace since July. The increase translates into a 4.5% annual rate of growth, up from 0.8% rise in the previous month. So that's what? A 5.5-fold increase in consumer credit. Economists had been expecting $10 billion gain, according to a Wall Street Journal survey. Revolving credit like credit cards rose at a 13.9% rate after a 1.4% gain in the prior month, biggest gain since February. Okay? Non-revolving credit, typically auto and student loans, rose by a slight 1.1%. And of course, it says the Fed's data does not include mortgage loans, the largest category of household debt. There are some types of debt that are good debt. Mortgage debt, if you have it at the right rate, it can be good debt, okay? But credit card debt, guys, is toxic. If you are not paying it off every month, I use my credit card to go, let's say, have a meal or for a business expense. I pay it off before the cycle ends so you don't get hit with interest, okay? But for those that aren't doing that and they're using credit cards as if it's a piggy bank or savings in their bank, is a very, very, very immature decision to be making and a very bad financial move, because some people will never be able to dig out from under that debt, okay? Not at 25, 27, 30% interest that these credit card companies are charging on these cards, okay? It's good to have credit cards to use them, again, that if you're paying them off, okay? But these are not the people that are paying them off. And wait till we see the delinquency rates in January and February for all the holiday spending. People aren't able to even make the minimum payments on their cards. Next story was out of the Zero Hedge. It says, in last hurrah, credit card debt explodes higher despite record high APRs as savings rate craters. This is what the title says, APRs, okay? That's the yearly interest rate on these cards. Those rates are going up. Savings rates, personal savings rates are going down. So people don't even have, let's say, the cushion with which to pay off that debt if they needed to, okay? Because there is no personal savings in this country. It's plummeting, okay? 1 month ago, it says, when multiple discount retailers were lamenting the sudden collapse in U.S. consumer purchasing power, this unexpected hit to U.S. consumption as the U.S. personal savings rate had collapsed. The growth in consumer credit was slowing, and last month the Fed reported that credit card debt growth posted its first decline since the COVID crash. But fast forwarding just 1 month later, when in a striking reversal, October reversed the dramatic September slowdown and soared again more than $19 billion to a record high. Listen to this. This is a record high, folks. $5.084 trillion of credit card debt owed by consumers in this country. And while non-revolving credit, it says it grew only by $3.5 billion. I covered that. It says what was truly remarkable about the latest consumer credit data is what the Federal Reserve's own website said was the average APR on credit cards across the United States. Readers may recall, it says in September, just after the Fed's jumbo rate cut, the first rate cut in years, that they made a prediction while rates on deposit and savings immediately dropped, interest rates on debt, such as credit card APRs, will barely budge, and that's what happened, okay? It says, once again, we were right because 3 months later, the Fed admitted that despite the rate cut, the interest rate on credit cards at the end of quarter three, 2 weeks after the Fed cut rates, rose more than 0.5% from the average rate at the end of Q2 at 22.78 to a new all-time high, 23.37%. Says, finally, we remind readers of what we said last month, namely that we can stop pretending that the government's recent fabrication of savings data, which was upwardly revised from a record low of 2.9% to a nice and balmy 4.8% is even remotely credible. Sure enough, just a few days later, we showed, with the election now over, it says that the Department of Commerce dramatically revised the data, and over $140 billion in savings was erased. The collapse in savings explains why most consumers are not only living paycheck to paycheck, but have maxed out both their buy now, pay later accounts, and as we now learn, their credit cards. As everyone braces for the moment when the U.S. economy suddenly grinds to a halt and collapses under the weight of its own debt, all right? Because we understand that the U.S. economy is driven by consumer spending, okay? But fine, consumer spending is one thing, but consumer debt is another, okay? And we all know that a big portion of the spending that the government touts as good for GDP is bad for, you know, the men and women on the street that are not able to repay that debt. So going into holiday shopping season now with Black Friday behind us, I hope that those of you that are in that category, that aren't retired, aren't set, haven't made it, you're still working, you're still, finding your way. Maybe your job isn't as secure as you think it is. Please, obviously, credit cards are there also for emergencies. Another caveat I will say, if you have an emergency and you have to use that credit card, even if you don't know how you're going to pay that debt, if it's a medical emergency or something like that, or you have to use it to put food on the table for your family, look, you have to do what you have to do. Survival is key. But for those that are out there using it to buy whatever stuff, things that don't have any real value, and are just going to get, that are going to sit in the closet or to impress your friends, right? When you don't know how you're going to make that minimum payment, and maybe that's the portion of the younger generation. I don't know, but I would just suggest that you not do that. So I'll leave it there today, about 12 minutes. I thought it was a really nice day today here in my hometown, Southern California, desert area. So I thought I would do a video here outside, and feeling better than I sound. Still kind of congested, but feeling good. So we'll see how long this thing hangs on. For those of you that are going to get some exercise in this weekend, kudos to you. I really applaud that. Get the workouts in, get those steps in, especially on a beautiful day, if weather permitting and mobility permitting, health permitting. Please go out, get those steps in. Let's stay healthy, and let's continue to get better, get stronger, get more resilient. Next year's button down the hatches, right? Strap in. It's going to be very interesting. Appreciate you guys. Talk to you soon. Bye.